Ryan Fleming can help you chart out a course for your retirement with his intimate knowledge of financial planning and the airline industry. It's time for the Pilot's Advisor.
Welcome to another episode of the Pilot's Advisor. What we're going to talk about today is very much what 2022 has been all about. The bear market. Since January 1, this market's done nothing but been volatile and in a negative direction. So we're going to talk about what to do during a bear market. It's not news to any of you that this year has been rough on investors. End of 2021, after reaching record levels, the market's experienced 6 months of decline. In fact, coming on the heels of such sustained gains has made this year's retreats even harder to stomach. Now, in most cases, people aren't down from where they were in 2022, the beginning of 2022, just because it was such a good year. But after being on this great upslope, making money, watching your 401k balances continue to increase, it makes it that much more painful. It's been a rough year. The expectation many investors have is that upward trend would simply continue, that it'd be that way forever, or maybe it might flatten a little bit, but still climb. I hate to say it, but I'm the bearer of bad news. Unfortunately, that's not the way markets work. Markets are more like a roller coaster than a rocket. You have up and down years, and you want to look at the linear trend because the up and down years, they're emotional. You can't count on upward momentum to keep taking you that way. And then when there are the sudden drops like we've had this year, it's usually a surprise and it's hard to deal with. So you're probably familiar with the two animals they talk about when they discuss markets and when they discuss the behavior of the market, the bull and the bear. A bull market's where stock prices as a whole are rising. A bear market's where they are falling. To differentiate the latter from short-term volatility, the experts, when they look into this, they largely agree that a bear market's when a broad market index experiences a decline of 20% sustained over a few months. Well, we've had that this year. It's not an exact measure, but with the major indexes down between 20 and 30% from the beginning of the year, pundits agree that we currently are in a bear market. As you can imagine, investors are not taking this news sitting down. Many people are moving their money, making emotional decisions, moving out of stocks into a multitude of other instruments, hoping that they can reverse their losses from bonds, precious metals, cash, obscure commodities, or just running for the hills. However, because the conditions of this bear market are unique, and they always are, it's always different, these alternatives are not behaving in the past, and they're not always bear-proof. We've been planning for the possibility of a bear market through diversification, and we've sought to mitigate some of the decline in the indexes, but more importantly, rebalancing and being ready to take advantage of the market recovery, because it will happen. Big gains often come and happen just a few days after hitting the bottom. And if you wait till it takes off, by the time that the reversal is evident, it's too late to buy in. And this is why market timing doesn't work. This is why investors hurt themselves. If they get totally out of the market and they're sitting on the sidelines, they'll never catch up because it'll be too late. Anthony Asola, who's a hedge educator of a wealth management firm, gives his advice on what to do in a bear market, and none of it has to do with investing, and I wanted to share it. First of all, he recommends that you acknowledge the role of your emotions, because our natural aversion to loss, the bad feelings that we hear caused by a bear market, that's what you feel, and it far outweighs the joy of when we have a bull market and producing nothing but gains. Nobody calls me, hey Ryan, we're making a little bit too much money this year, I really want to go to cash. This is hurting way too much. I don't want to get greedy, so I think we should go to cash. Just doesn't happen. So that upward volatility is totally a different feeling than the downward volatility. Second, in a bear market like this, just make sure you're getting enough sleep. A sleep-deprived brain is much more prone to worry, and a lack of adequate rest, it actually leads to many other health issues. And this is why we talk about just not looking at it. Just let it go away. Like, try not to focus on it, because if you're looking at your portfolio every day, that's my job. It's stressful. It's emotional. It sucks, especially when there's not a lot you can do about it except position yourself properly to take advantage of it. And finally, the recommendation, Don't try to wade through something in order to better yourself. Find something you truly enjoy. Go fishing. Find a nice book that you like to read. Go fly your private airplane if that's what you like to do. Go hiking. Try to lose yourself and stop, fitting around and worrying about all the things, worrying about retirement. Because go do something, go to the gym, do something that's health and common. The bear market and letting it determine your level of happiness is a huge mistake. If you focus on it, it's going to make things that much worse. I promise you, everything's going to be okay. I promise you that the next 100% is going to be up, because it always is. So we got to focus on positioning ourselves to take advantage of the recovery, because it will come. It's just a matter of when. Signing off one more time. Hang in there with me. Fair skies, and I'll help you land in retirement safely. Take care.
Information is for illustrative purposes only and does not constitute tax, investment, or legal advice. Always consult with a qualified investment, legal, or tax professional before taking any action.